Hello friends, welcome you back to the video session on Page Economics Zone, and today I have come with the topic of monetary policy. So before starting the video, let me tell you, if you have not subscribed my channel, do subscribe it for more videos. So let us begin our topic, that is monetary policy. See, monetary policy, first of all we need to understand what monetary meaning here is. Monetary means money related. Anything which is money related, that is monetary. So there are certain policies which beholds the monetary issues. So one of those policy is monetary policy, and this policy is generally governed by the central bank or the reserve bank of any country. Maybe any country, but there is always a central bank which is actually governing the currency. Okay. So let me first of all read a very short definition which I have written. Monetary policy is the policy of the central bank through which it controls the availability of cost, inflation, use of money, credit, etc. See, what this monetary policy says is that monetary policy is a tool of the central bank of any country through which it controls all, like credit related problems, currency related problems, and whatever. So when it comes into the play, or you can say when it is functional, actually it is functional every time you might be seen in the news, or maybe in your, when you study little bit of economics or read little bit of newspaper, you might be seeing that any country's reserve bank is always active, because the reason for the activeness of the bank is that it is one of the apex bank first of all, and it has to govern all the other commercial bank, whatever banks you are having in your country, those private or government sector bank, all these banks are governed by the reserve bank or the central bank of that particular country. So every time there is an economic situation, either falling, rising, or whatever is going on in our country, to control that type of situation, during the time, even if there is an inflation, suppose let us take an example of inflation. So when there is inflation, what the reserve bank of our country does is that it tries to control the inflation, the problem of inflation. Whenever there is a rise in the price of any items or the products, all the types of product in the economy or in the market, that time what RBI or the reserve bank or the central bank of any country does is that it try to take away the money or the extra purchasing power from the people hand, and because of that reason what happens, the inflation automatically comes down. So how it takes, there are different quantitative and qualitative tools through which the reserve bank controls the inflation and even the deflation. So these are the tools, and it also serves other functions, like it does the, you can say, one of the creditors function to the private banks or to the commercial bank of any country. So monetary policy, basically, in a very simple word, it is a policy of the money related policy, money related rules and regulation, which is governed by the apex banking system of any country, that is the central bank or the reserve bank of our country. Okay. So basically monetary policy, everything, whenever in economic phenomena, whatever is happening and what need to be done to control, if something situation or something crisis situation rises, the monetary policy or the other policies also, there is fiscal policy. Fiscal policy is the policy of the government. Okay, so these two policy come into the play, and because of these two policy only the economic condition can be stabilized. So these two policies are very important part of any economy, and the main work of all these policy is to control or to keep the check of economic crisis or any situation which is not favorable for economy. And time to time the rules are changed and the policies are modified to suit the best need of that particular time. Okay, as you know, in economy many things comes which is very much new. A situation may come which is very much new to be tackled. So during that time also, these people or the reserve bank or the RBI, they sit together, the people, the economists, they sit together and they decide certain policy which can be formulated or regulated or can be come into play, so that these things, the economy runs smoothly. Okay, So this is what about this is all about the monetary policy. So hope you have understood. The concept is very much clear to you now about monetary policy. And for more such videos, keep on subscribing, liking my videos, and share with your friends. Thank you.